Hello everyone, and thank you for watching this weekly technical outlook video for the week starting Monday, February 19th. I'm Christina Barthenidou, investment analyst, and at this video I'll present you my technical outlook on dollar yen, euro dollar, and pound dollar. Well, the week ahead is expected to be relatively quiet in terms of data releases, with the S&P global business PMI figures out of the Eurozone, the UK, and the US being the only highlight of this week's events. In the US, the focus will also be on the FOMC meeting minutes on Wednesday, as investors are still looking for signs about whether the first rate cut will happen as soon as in June. So starting first with dollar yen and the FOMC meeting minutes. Well, if policymakers, if the minutes show that more policymakers wanted an earlier rate cut, that could add pressure on dollar yen. However, the US economy has been quite resilient, and it has been mostly reducing the odds for an earlier rate cut so far. So if the S&P global business PMI figures come stronger than expected as well in February, well, that could help dollar to resume its upward pattern. We may see another test around this broken support trend line, which is more clear in the 4-hour chart at 150.80. If we surpass that barrier, then we may face an immediate resistance between the 151.4, the 151.93 territory, where the pair peaked in November. And if we continue higher, then the next target could be the 153 round level, where this tentative resistance line is located. But we shouldn't forget that Japanese authorities are not very happy when when dollar yen is rising rapidly above the 150 level. So we shouldn't forget that an FX intervention from Japan could also be a risk for dollar yen in the short term. So now looking at from a technical perspective, both the RSI and the stochastic indicators have reversed to the downside. So following the break below the support trend line, the technical risk is more skewed to the downside than to the upside. So I expect the continuation of last week's pullback. If that happens, that may not create serious concerns as long as we hold above this support trend line coming from December's lows, currently seen at 148.66. and closer to the 20-day moving average. If we fail to rebound here, then that could strengthen selling interest, probably towards the 143.30, 147 point, towards the 147.30, 147.60 territory, where this broken falling trend line is placed. Now turning to looking at euro dollar in the S&P global business PMI figures, the data are expected to increase for the second consecutive month in February. That could be good news for the euros, and perhaps that may also increase. That could also make a break above the 1.08 level possible in the short term. This is currently a key resistance territory, where this is also where the 20-day moving average and this important resistance trend line are located. So a close above that bar could trigger a new bullish phase, especially if the price also surpasses its 200-day moving average, in which case we may see an extension towards the 1.0880 level, where the 38.2% Fibonacci mark of this uptrend is located. We have to break this barrier in order to officially violate this downtrend, and therefore perhaps see a fast rally towards the 23.6% Fibonacci 1.0980 and near the 1.10 level, where this tentative descending trend line from May 2021 is placed. Now, in the event of a decline, which is not impossible given that the RSI has yet to cross above its 50 neutral mark, well, in this case, if the price moves below the 1.0750 mark and under this support trend line, then support could come around the 61.8% Fibonacci of 1.0711. If that fails to hold, then the decline could stretch towards the 1.0665 and 1.635 region to meet the lower band of this bearish channel. Then finally, turning to pound dollar in the flash S&P Global Business PMI figures out of the UK. Well, analysts are optimistic that UK businesses have faced improved condition for the second consecutive month. That could be also good news for the British pound. So if the data comes stronger than expected, pound dollar could rally towards the 1.27 resistance. This is where this descending trend line from July 2023 is located, as well as this broken support trend line. So that region could be critical, but I would also like to see a recovery or perhaps an after reception above the 1.2770 barrier before I become more confident that the price may attempt to reach the 1.2850, 1.29 constraining zone. Well, from a technical perspective, we don't have a clear bullish bias yet. The RSI still below 50, and the stochastics are still lacking direction. So downside risks are still present in the market. However, what could cause the new bearish phase in pound dollar is perhaps a break below the 1.2563 level. This is where this important support trend line coming from the 2022 low is placed, and we saw this is also where the price rebounded last week. So if the bears drive the market below that floor, we may see a new decline towards the 1.25 and 1.2470 territory, while lower than that, a faster decline towards the 1.24 level could take place. So that's all for this week's important FX pairs. Thank you for watching, and wish you have a great trading week.